Good evening, and welcome to our market coverage. Let me walk you through what has been a truly fascinating day of trading across global markets. The big story tonight is the clear divergence we are seeing between Asia and the West. Let me give you the numbers first. The Nasdaq closed at 26,281, up 0.29%. The S&P 500 finished at 7,575, gaining 0.42%. The Dow Jones ended at 52,637, up 0.28%. The VIX, which is our fear gauge, dropped more than 5% to 15.03, telling us that investors are not panicking. The 10-year Treasury yield edged up to 4.57%. The dollar index held steady near 100.96, and the offshore Chinese yuan stayed around 6.78, showing very little movement. Now let me explain what drove the action today. Asian markets came under significant selling pressure from two major catalysts. First, the Bank of Japan surprised the market by expanding its yield curve control band from 0.5% to 1% on the long-term bond yield. This sent the Nikkei 225 down about 2.5% and pushed the yen higher by 1.2% in a single session. Second, China's A-share market took a direct hit from new U.S. semiconductor export control rules and rare earth sentiment. The Chi-Next index, which tracks China's growth stocks, plunged 4.37%, making it the worst-performing major index globally today. But here is where it gets interesting. Instead of a broad-based sell-off, we saw money rotate out of Asian risk assets and into U.S. tech giants and cryptocurrencies. The Nasdaq 100 futures rose 0.63% in pre-market trading. S&P 500 futures also gained 0.63%. Nvidia, which surged 4.27% yesterday, continued to show strength in pre-market activity. This tells us the market's conviction in the artificial intelligence and computing theme remains very much intact. Bitcoin climbed 1.41% to $64,112, while Ethereum did even better with a 2.73% gain. The money flow is clear. Capital is moving from Japanese equities and Chinese stocks into U.S. technology leaders and digital assets. Looking at the currency and bond market linkage, the yen's sharp appreciation combined with the rise in U.S. Treasury yields reflects growing expectations for a higher global interest rate floor. The Chinese yuan held relatively firm despite the pressure in Asia, suggesting the People's Bank of China may have been using its daily fixing to stabilize the currency. So the overall market structure tonight can be summed up as Asia releasing risk while the US and Europe show resilience. Now let me give you our outlook for tomorrow. There are several key variables to watch. First and foremost, the U.S. Producer Price Index data is due out tonight. If the year-over-year reading comes in below 3.8%, we could see U.S. futures extend their gains to more than 1%. But if it exceeds 4%, expect a pullback to flat. For Japan, the Nikkei will likely open lower tomorrow but may attempt a partial recovery. However, the bounce is expected to be limited because the full impact of the Bank of Japan policy shift has not yet been fully absorbed. For China's Chi-Next index, we expect a possible technical rebound after today's heavy sell-off, but the medium-term outlook remains pressured by semiconductor restrictions. In terms of our trading strategy, we maintain a cautiously bullish stance with a focus on US AI-related tech stocks and crypto assets while staying defensive on Asia-Pacific markets. If the PPI data comes in below expectations and the S&P 500 futures hold above 7,640, we would consider adding to Nasdaq futures or QQQ call options. But if the data surprises to the upside, we recommend waiting on the sidelines for a pullback to the 10-day moving average. Our probability assessment gives a 60% chance of further upside, 25% chance of sideways trading, and 15% chance of a decline. Keep a close eye on tonight's PPI release. It will set the tone for tomorrow's session. Thank you for watching, and we will see you back here tomorrow.